The law of relativity, pretty big deal, right? Pretty big deal in physics, pretty big deal in the markets. Relatively strong, relatively weak. How do we use relativity when we're talking about investment ideas? So let's talk about that on today's Market Brief. So one of the simplest things you can do as an investor is understand how market relativity impacts the investments you look for. And so what is market relativity? Well, market relativity is how is the performance of an individual security relative to the market in general, right? Relative to what the S&P is doing, what the Nasdaq is doing, what the Dow is doing. And we primarily look at the S&P 500 as kind of the bellwether, right? The one that tells me what should I pay the most attention to. And if I've got, as we've seen in the last, we'll call this the Fed-driven sell-off over the last few weeks here in the S&P. But if I've got stocks that have been going sideways while the market's been going down, I would consider those to be relatively strong, right? Same thing where earlier in the year as the market was going up, if those stocks were dropping at the same time that the market was going up, those stocks would be relatively weak. And our belief would be this: if we start to see the market have the beginnings of strength, then the stocks that were relatively strong while the market was pulling down will be our leaders when we begin the next move up. Now, I want relative but not full divergence, meaning I don't want a stock that was rocketing up while the market was going down. I want a stock that was going sideways while the market was going down, because if a stock is rocketing up while the market is going down, that is an inverse correlation, and that can just be straight divergence. And that can mean that when the market goes up, the stock comes back down. What I want is to find that sweet spot of stocks that when the market's going down are going sideways, and when the markets are, because then when the markets reverse and start to head back up, they are usually going to be our leaders to go forward. Same thing is that if the market is rising and I'm looking for bearish opportunities, maybe the market's rising in a bear rally, then I would look for stocks that have gone sideways. And so those are kind of the sweet spot. So let's go take a look at the charts real quick and show you what I mean. So here I have a chart of the S&P 500, and I'm just gonna put a major stock up like Walmart. And when I look at a stock like Walmart, the candlesticks represent the price of Walmart. This purple line here is the S&P 500. And I used Walmart very, very specifically. I used Walmart because I knew that Walmart was basically, it's a market follower, right? It's relatively the same movements as the market. What we can see is that as the market has gone down, so too did Walmart, right? And I've just got this list of the full S&P 500 over here to the left, sorted by price. Randomly, let's just pick, FedEx. So here's an example of taking a look at FedEx, right? We can see that the purple is the S&P dropping, but at the same time that the S&P was dropping, FedEx had a little bit of a gap up, but also began to drop. Well, why did it have this little gap up? Well, that was due to earnings, right? The earnings report came out, FedEx reacted. So I would say that this is essentially market performing and not something that is relatively strong. Here's an example of something that's relatively weak. Notice for the last year, it's really underperformed the market in general, right? There are a number of stocks. I'm going to use Goldman Sachs as a great example. A number of stocks that have underperformed the market, right? Goldman Sachs is a great example that when the market was rallying through this part of the year, Goldman Sachs was basically going sideways. And so it's never been able to, kind of retake its place as outpacing the market in general. So certainly if I were looking for bearish opportunities, this would be in the wheelhouse of stocks that I might look for. So what am I looking for when I look for stocks to see what is their relative strength to the market in general? Well, a stock that we may talk about maybe would be something like Meta, right? Facebook stock. Facebook, has really said that how are we going to embrace AI? It's gained a fair amount of positive momentum. And what we see is that it was basically market performing. Originally, it pulled down. But as the market has done this Fed-driven sell-off, Facebook kind of went sideways, right? So then as the market started to react and head back up, Facebook also started to head back up. And this is an example of relative strength, a stock that kind of went sideways while the market went down. So, how do I find those? Well, there are certainly proprietary scanners that you can use, but one of my favorite things to do is quite literally just to pull up a public list. And let's say, for example, I wanted to go through the NASDAQ, right? So, if I wanted to go through the NASDAQ 100, I can literally pull them up and just check line by line and walk through every stock in the NASDAQ, right? So here's a great example of one that's greatly underperformed the market in general, right? As the market's gone up the last few days, eBay has chopped along sideways. So if I were looking for a bearish opportunity, if I don't really believe that this market rally that we've had over the last few days is going to get us to new highs, then I might look at eBay as an opportunity to get short, to make money on the way down if we get below some of these key lows. So if the market starts to reverse because it's gone sideways, right? As the market's gone up, it's gone sideways. This one here has basically followed the same market movement. It's just been underperforming the market in general. And so what I'm really looking for is sideways price action of a security relative to directional price action of the market in general. And that's why I can go through, here's another great example. I can go through hundreds of stocks, quite literally, in a few hours if I structure myself in that way. Because once again, here's an example of the market rallied up while this stock was not able to do so. So this would make for a potential short opportunity because we're comparing against this most recent rally. Right now, if we want to compare against this strong drop in price, we would then look for bullish opportunities. And you can go to the Magnificent Seven stocks, right? Like Nvidia, is the one that a lot of people talk about from an AI perspective. And it started to rally. If you notice here, it started to rally before the market in general started to rally, which is oftentimes why we get the market rally anyway. And so some of this thing to remember, the thing to remember on, we're talking about relative strength versus relative weakness. And I don't really have one particular best performing stock to share with you today because it's really all about what do you identify when the market gives us that opportunity. But strength begets strength, weakness begets more weakness. And we want to look for relative strength when we're looking to be buyers and relative weakness when we're looking to be sellers. If you got any questions, as always, send us an email, support@TradersArmy.com. Until next week, everybody, I will talk to you soon. See you.